Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi Mel, how are you today and how your week been so far?
Hi, Peter. It's been an eventful week for us. We are working on some articles that we are hoping to publish soon. A follow up to your interview from last week. So that's an exciting thing that we're up to these days. How about you, Peter? How have you been this week?
It's great. The summertime has arrived. That's nice in Denmark.
Wow.
And yeah, the world is sort of on the move all the time, and that actually requires extra attention in understanding what is happening and evaluating what do we think. But of course, also it means yeah, more conversations with investors and trying to take the temperature and come up with where we're heading. So yeah, it's busy, but it's okay busy also with good things and people looking to our funds. We're happy. So yeah, interesting things to cover today from across the world, and we will start out in Malaysia actually again, adjusting the tax policy, and then touch actually the Chinese stock market today. It was
Mm-hmm.
weaker than the rest of the world, sort of. Yeah, we just noticed that one. And of course, honestly, the big thing right now on our whiteboard is also we're trying to look into the escalating situation in Iran versus particular Israel, but also maybe US and there's a whole situation in the Middle East. Yeah, and there are so many angles to take the view from and
Mm-hmm.
to discuss. We will take cover of them actually sort of bit saying, okay, well, what do we notice in the politically military action? What do we think? And then jump a bit into the oil price because that
Mm-hmm.
is what is most affected. And of course, in the end, as always, we will see how much sunshine there is left in the world. So, Mel, what's going on in Malaysia? Tell us.
Yes, so Peter, actually, Malaysia's in the middle of implementing a tax reform where they are actually expanding their tax base, a very unpopular move, but their prime minister, who is also serving as their finance minister, is adamant about it. He describes the changes as necessary. So the sales and services tax of ranging between 5 to 10% will be expanded by July 1st. So a lot of what they consider luxury goods and services will be taxed, broadening the tax base to include imported fruits, imported fish like salmon, antique art, and I think the most painful one relatively would be commercial leases. So rent is basically
Oh,
subject to a bigger tax rate as well as private school tuition. The plan really is to raise more funds for the government by an expected 3 billion ringgit. So that's about 700,000 US dollars. So a bit low as far as the context of the whole economy, but it's more of principle, according to Prime Minister Anwar Ibrahim. And further, they're also looking to overhaul the fuel subsidy that citizens have long enjoyed. So that's
mm,
forthcoming later this year. So a lot of
mm,
changes coming for Malaysia, but the fear is that it could be a bit inflationary, especially the fuel part. And it's looking
yeah.
like so far sounding like an implementation nightmare because unlike what they did with diesel, they're going to categorize consumers based on income. So the subsidy will be removed for people classified under the 15% top bracket as far as income is concerned. So that's something that they need to work on. And I don't know how it will pan out. I mean, it sounds difficult, especially if you implement it at the pump. So we'll look at that. Zooming out on a larger scale, Malaysia appears in a better position to do that versus countries like the US and Europe. Malaysia has a relatively better inflation, below 2%. Their debt to GDP is around 70% versus 100 plus or 200 plus, like Japan or the US or European countries. So
Mm.
it is a good reform to pursue, although largely unpopular at that. But yeah, it's something to monitor in this side of the world, Peter.
Yeah, it's a bit sort of looking into what happens in the other Southeast Asian economies is not in the trend. Yeah, so simply
Mhm.
to broaden the tax base or simply to
Raise taxes, yeah.
raise taxes somehow here and there. As you say, it's not the biggest amount in the world. Uh,
Hmm.
Probably won't affect the GDP so much,
Yes.
but still interesting what they're doing. Good. Today, China stock market was actually a bit nervous.
Yeah.
We're depending a bit on which exchange we're looking at or which index, but as we could say from where most outside investors are exposed, it was up to -2% in general,
Hmm.
and domestically just 1%. But anyway, there's of course always news out, and some of the tech companies they lost a bit more, but it's just because they're more volatile. Yeah, so when things go down, they lose more, and when things are positive, they earn more. We see it as a reaction on Middle East. China is a bit more dependent on the oil price, so higher oil prices is simply bad for the Chinese economy, to put it outright. Yeah. How should we take it? This is just sort of a lonely day and just a bad mood on on the Chinese stock exchanges, or is the turning point? Are we turning? Is the what happens?
I was actually looking at the Hang Seng Index just before we went live, and it is a lot bigger. The decline was 2% versus like 0.2% in like Japan and Korea's major exchanges. The
Yeah.
reaction is really, as you said, I think they have more reasons to be nervous. They're already jittery as it is because a negotiation with Trump has not officially like been finalized yet. So they're jittery towards that. And then you add the conflict between Israel and Iran and the impact on oil. So that's really where the extra nervousness is coming from. I think though that it will be a temporary thing unless of course the tension escalates with perhaps an intervention from the US. But it will moderate in the coming days as investors digest the news or like take it as a given for the next few days or weeks. So that's how I see it panning out.
Yeah. Also we are not panicking here yet. Uh, but one day swing, we shouldn't pay too much attention to it.
Mm-hmm.
I think the way we treat it is to say, okay, we note it because it is a bit interesting. It can be interesting. So far, the stock market has they have taken big pressure
Mm-hmm.
uh, with a positive response, so to say. Yeah, as there have been a pretty robust, a strong stock market, also in China, around the world, many places. They've taken a lot of bad news into
Yeah.
account and actually still moved on the upside. So now we have this sort of pretty weak reaction on rising oil prices, but so we do make a notice of it. We say, okay, it can be a change of a midterm mood. We don't
Mm-hmm.
know yet. We just note it, but it's why we take it up here actually, and that is to share with our many listeners that we make this small note on the wall, yellow. So this is one of these yellow reminders
One of
that
the things we monitor.
yeah. So there was a weekday, and was it just a lonely one, or should we sort of be more nervous? So that is yeah. It is just we noted. That is the most important what we say about it today. It is of course as the oil and Middle East that is sort of probably the reason why some Chinese investors are
Mm-hmm.
international investors are nervous on for Chinese companies. And when let's jump into to the subject ourselves and see how do we deal with it so far here. There are many angles. Where do we sort of focus right now as the most important angles?
I think the biggest thing that markets are looking forward to hearing an update from is basically the US's involvement in the whole Israel-Iran situation. Trump
Yeah.
has been speaking about it vaguely
Mhm.
over the past few days. He called for Iran to surrender. There's some indication that they could be bracing to intervene and attack Tehran as well to defend Israel because we know that it's a strategic ally and there's also this major consideration that the biggest fear really is to disrupt global oil supply. So um, shipment disruptions via the Strait of Hormuz, which where 25% of world supply passes through, is really a major consideration. And to secure that, would be crucial as far as oil prices and of course inflation are concerned. We heard that the Fed overnight decided to keep rates steady, and apart from the tariff issues, the Middle East concerns was another layer that kept them hesitant about cutting rates further. So that's one dimension of it, Peter.
Yeah, exactly. Yeah, as you mentioned, we one of the angles is, of course, the political military angle because it is sort of the next steps we are looking into or potential steps. Again, what we are discussing internally and sharing here is what kind of steps could be taken and what is the likelihood.
Mhm.
And and the most basic, and you could say the most the step as I wouldn't call it the weakest because I don't think there are any weak steps in this story
Not
here.
here.
But but in terms of market impacts and volatility and nervousness for the market, that would actually, without knowing Trump personally or even indirectly, I would say one of the thinkings could be actually as a very basically to secure that American commercial vessels, as American ships, they can move freely, also through the Hormuz Strait and also as a basically in seawater trade routes in the Arab Sea and the oceans around the Middle East. Yeah, that would be the very basic thing to do to secure U.S.'s own ship as their own commercial interest. And even that is without any doubt possible. So the fifth fleet of the new U.S. Navy is actually home based in the Middle East, Bahrain, I believe. And we are seeing that the part of the Mediterranean fleet is moved towards the east. So
Mhm.
U.S. can both help Israel in defending Israel. It is a threat, and they can also at the same time protect U.S. Commercial vessels. That would be sort of a base scenario where you could say U.S. is not really directly engaging in anything of attacking Iran on the ground. So that is sort of basic, and it won't move a lot. It might calm the oil price a bit, actually.
Mhm.
If we look into some other scenarios, in particular one, it is stumbling close and to be the most obvious thing to do, and that is actually, of course, what Israel is calling for is, you could say, sort of specific airstrikes, taking out specific things in Iran, and that is, of course, the nuclear production plants. That is important to take out from Israel's perspective and maybe also from an international perspective, so to say. And there we're talking about, in particular, the production facility in Qom.
Ah.
Due to reports from people, as from the West, from the agency, the nuclear international agency that has visited the place,
Mhm.
it should be whatever bunker building that is going up to 800 meters down in the earth, as below the surface,
Below the
and that
surface.
is yeah, and that is heavy. Either it is such buildings are armed with 5 to 10 meters
Mm-hmm.
thick armed material in the top, and it is impossible to bomb through. But part of the facilities might be simply in the mountain, and it is below a sort of 80 meters of mountain material, granite, whatever, yeah, that needs to be exploded away. It is enormous what we're talking about. And the Americans, they have these giant conventional bombs that can blow away a lot, and they will also have the firepower to launch a lot of missiles, also like tomahawks and
Right.
so also conventional, but simply have enough firepower to ruin and bomb through everything for such even extremely well protected production facilities. There are a couple of other places in Iran as well, and that would probably be on the target list if that is what US decides to do. And this is actually to make some sort of a conclusion on this as well. This is actually what we see. We are not military experts, so to say, but we try to say, okay, what do we see as the most likely outcome?
Mm-hmm.
And that is actually it is getting closer to these targeted strikes.
Right.
They will be heavy. They will be extreme heavy. It is done without a lot of risk, as Israel has taken over the control of the as yeah. There's no attack possibilities from Iran, so to say. The air force is not functional. That pretty easy for US to maneuver in by air and
Mm-hmm.
send in whatever is needed by air. And that is because and that makes it again stumbling close to be the solution to get it eliminated. And that is actually what we say
Mm-hmm.
this could be the most likely outcome. And then as whatever we think, we always do the other side and say, okay, what do we think that the market is expecting? What is priced in the market already? And this is basically the important check. Yeah. We consider an escalation in Iran with some targeted US strikes as already priced in the market, so to say. It is basically what we see. And we think this is more priced in than not priced in. So what we're talking about here is probably not a big surprise to the financial markets and in particular the oil market if it happens. This is how we see it. It will for sure not generate positive vibrations in the stock market. It will be negative. And then again, the small key from what we talked about, China, is the stock market getting softer all of a sudden? And can it resist a US escalation in Iran? We will say yes, but we are ready to observe how negative will the stock market take it, because it won't be positive. It will be negative. And we are a bit concerned midterm that it could be all of a sudden a bit more soft than we like. And again, the oil market, we would say it is priced in the oil market. We expect this to happen, but we actually also expect that the majority in the oil market of the people acting in the oil market, they
Mm-hmm.
expect the same. An escalation with targeted strikes from US. So it is already priced in the oil market as well. So it won't send oil a lot higher. And if we should move into the oil discussion, well, there are a couple of things we look at as well there, yeah.
Mm-hmm.
One of them is inflation.
Yes,
Is it?
definitely.
Yeah, yeah. And that is a conversation we've had many times. We are concerned about the inflation level in the world, yeah. So what do we say to this one? Is it a killer,
Well,
the oil price right
together.
now?
Not yet. There has been a major move over the past few days, about 10% increase over the past
Mhm.
week. 4% in one day alone when the first airstrike that hit energy infrastructure was published on the news. But
Yeah.
yes, the expectation is really an escalation in the short term. So that has been priced in. But on the other side of the discussion is um supply of oil has been consistently higher than demand over the past few months. Um,
Mm,
well, mainly because activity in major economies like China and the US has been slowing down. And of course, a few podcasts back, we also talked about some additional uh, production levels from OPEC countries. So
mhm.
supply
Yeah,
will be ample in the next few months.
yeah.
Maybe the impact of this, if any, will not be felt over the next couple of weeks. So, yeah.
Actually, yeah, as you hint, 2 days ago, the International Energy Agency was out reconfirming that they see a production surplus this year, even despite a sort of escalation of the Iran situation.
Mhm.
There's oversupply of oil, and as you also say, they also confirm one of the reasons is that it's still demand is still slowing down in China and US actually. This is, of course, also something we note when we're talking about the GDP expectations, but that's another story today. So yes, we are not concerned about another spike in the oil price. It
Mhm.
was, if we look into crude oil, sort of, it was around almost down to $60 in the start of this month, and that is crude is US. And now as we are talking about this right now, actually is $76. It's sort of 25% up from the start of the month. That's a lot, but it is not. When we're looking year to year, it's not inflationary yet. 1 year ago, the oil price was actually higher, so the current oil price even still has a sort of a negative effect on the yearly inflation. But of course, compared to where we were for 1 month ago, it is indicating an inflation risk now. That would be visible if this current price stays until August, particularly September. Then we will start to see year-on-year increases in the oil price and also energy prices. We are not so concerned. We could actually argue that the current price, even the current price, is a bit speculative, yeah,
Mhm.
because it is including a sort of risk of shortage, but that the shortage are in the oil production or supply is not visible yet. So it could easily be that under current conditions with the current supplies, that the natural level for crude oil is somewhere between 60 and 60, 76, yeah. So the mid 60s or something. So that is our view as we actually see the reaction in the oil market maybe a bit too much. So again, it's not that we are currently not extreme nervous and concerned. We already see that priced in there will be U.S. military actions into Iran with specific targets. Well, let's see how much sunshine does that leave us when we look out for the global market. Yeah.
Well, of course, we do note that these recent developments of escalating conflict between Israel and Iran is another source of uncertainty for the global markets. But it is not at a level that should cause panic anytime soon, at least. There is some speculation, as we discussed a few minutes back, but um, there is still some relative strength as far as major economies are concerned. There is some slowdown in activity and because of the uncertainty, but they are coming from a relatively strong position, especially for economies in Asia, a bit of for the US as well. But yeah, there is still sunshine. There are more clouds. There's an additional cloud that um, propped up. But yeah, we are continuing to find reasons to be optimistic about prospects, Peter.
Yeah. We remain as a very basic, and that is, of course, also why we don't change our very basic outlook that often.
Mm-hmm.
We still see a good amount of sunshine. We are focused on the growth in the world. We are focusing on strengths in some areas, also like the credit risk going on. So we still have again, sort of in general, an overall, as an overweight of risk more than neutral. So that's okay. As mentioned here today, and you also mentioned, we are observant about the midterm outlook for the stock market. Should we have a concern? Is a sort of a midterm weakness as for correction downwards? It can be. This is very early stage for us to talk about it. It won't necessarily change our overall strong outlook, but within such a world, we could see some temporary setbacks. It's not what we are forecasting now. We just have it a bit on the radar screen to say, okay, is that a risk increasing? And
Mm-hmm.
this is basically our open question today. We can't answer. We just have it and we work with it. But it's not leading to any position adjustments or any increased nervousness. We
Right.
reckon that the world is getting more complex. And it will be an additional complexity if the US is getting military active in Iran. And we believe it will happen. This is the most likely outcome scenario. So yes, sun shines, but even a couple of near-term clouds all of a sudden coming across the weather forecast. Yeah, this was what we have on our heart today. A lot of thinking because when things change, then we need to rethink everything through. Good. But thank you so much to you, Mel, and thank you extremely lot to all the listeners. We are so happy you listen, and we hear next week again.
Thanks, Peter, and thanks, everyone.
We will be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Lundgren's Investor Insights. Thanks for tuning in. For expert insights on the go, download the Lundgren's Investor Insights app for free. For investors, we offer very exciting and high-quality alternative investment funds, including our top-rated mutual China fund. To know more, visit lundgrenscapital.com.